So we got this MFS issue that emerged yesterday. I had never even heard of this company.
Is there something more broader here that people are concerned about?
I think definitely. I think, it's only how many examples you need for it not to be considered a trend.
A UK lender has just collapsed, with allegations of double-pledged collateral. There could be a £930 million hole, with a number of major banks are reportedly exposed. So in today's video, let's try to break down exactly what happened with MFS Financial UK, why this matters for investors, and whether this is just one company failing, or a warning sign for the wider property and private credit market. MFS Financial is a relatively small lender, but the fact this news is making it onto CNBC and Bloomberg shows how nervous investors are about the space. Now take a listen to what Brennan Hawken of BMO told Closing Bell Overtime.
So Jeffries, this isn't the first. So we got this MFS issue that emerged yesterday. I had never even heard of this company. I thought we were talking about Massachusetts Financial, and it was the Boston-based asset manager. So we had to, reach out and talk and get an understanding. Unfortunately, the news flow has just sort of continued to deteriorate. And it seems as though a decent amount of this collateral has been double pledged. It sounds a lot like the First Brands issue. Mm-hmm. Now, the ironic thing is there's been a lot of concern and focus on the direct lending part of the private credit market. So far, actually, we've seen issues emerge from the asset-based finance part and that isn't always private credit. They do have a private credit version. So maybe the focus might shift to be a little more there. We saw Apollo underperform today. They're much bigger in that market. I suspect that's investors saying maybe we need to catch up.
MFS Financial, formerly known as Market Financial Solutions, was a specialist UK property lender. They focused on bridging loans, buy-to-let mortgages, and short-term property finance, mostly backed by institutional funding lines. Put simply, they borrowed money from large institutions, then lend it out to property investors and others at higher rates. The difference is where they make a profit. That is a common lending strategy in private credit, but it only works if the underlying collateral is solid and properly secured.
Talk to us about Market Financial Solutions. Who are these people and what part of the credit market do they play in?
So they're a niche market mortgage lender, I suppose. So they kind of step in where traditional banks won't, and they provide short-term sort of bridging loans or other complex structures to help facilitate, maybe there's an entity that wants to sell a property and buy another, doesn't have the cash to do that immediately. That's what's called a bridging loan. So to finance this, they borrowed vast amounts of money from traditional lenders on Wall Street, and then they're tasked with collecting payments and servicing these loans in a sense. So that's the business model. But what turns out, the allegations are that a lot of this money that was supposed to be going back into the certain bank accounts went to other bank accounts. Right. The court documents so far show that there's around 200 million that kind of got channeled into the wrong place. And on top of that, and this is what makes it much more interesting, is that it appears, and the allegations are that there's been some double pledging of collateral. So, yeah.
In February 2026, MFS entered administration, which in the UK is basically a formal insolvency process, where external administrators take control of the company. The reason given initially was restricted access to banking facilities, but reports quickly escalated. Then comes reports that creditors have alleged some properties were pledged multiple times as collateral. That is known in the credit world as double pledging. That is very significant because, if true, it means the same asset was used to secure more than one loan. And that's where the reports of a £930 million shortfall figure comes from. Here's where it gets even more serious though. MFS reportedly had funding exposure from major financial institutions. That means its collapse could have a ripple effect that may hit private credit funds, investment banks and institutional players who extended loans to them. That, of course, doesn't signal a banking crisis, especially because major financial institutions these days are well capitalized. But investors are very nervous of late, so any hint of problems, they head for the exit. Take a listen to how this was reported on Bloomberg Radio in regards to the wider sector exposure and associated risks.
In the equity market, some of these lenders definitely took a hit. I think Jefferies was down as much as 10% yesterday because they're exposed to around 100 million to this entity. Apollo also down 5%. It had lent around 400 to this entity via its secured credit vehicle Atlas. So yeah, there's already signs of jitters in the equity market, but not seeing this spreading to credit yet.
And the situation has also highlighted something important, which is that private credit has boomed over the last decade, relying heavily on trust and collateral integrity. So if confidence weakens, liquidity dries up very fast. So what should investors actually take from this situation? Well, to start, this appears to be company-specific, not a systemic collapse. And second, it's a reminder to everyone that yield comes with risk, meaning higher return lending structures, especially in property, depends heavily on proper security and transparency. We've seen stress in commercial property and refinancing pressure due to higher interest rates. In this recent CNBC interview, Dan Rasmussen from Verdad Capital explains that private credit, which is now a $1.5 trillion industry, has been lending heavily to private equity deals.
So they've massively expanded, right? And predictably, when you lend at high rates, the only reason that you can lend at high interest rates is if the default risk is high. And if you're seeing this type of lending at the type of loan levels that private credit has been lending at, imply that this is like low single B type credit. And low single B type credit in a recession, about 30% of that defaults. So you could be looking at very significant losses across these portfolios in any type of credit stress environment. Well, the problem with private credit, right, they marketed illiquidity and opacity, and they said, gee, we're experts, we can trade these private market things, and they're better than the stuff you can access in public markets. Well, when things go wrong, people say, well, what do you own? And they've never heard of any of these companies they're lending to. And so it's too opaque. People are going to throw the baby out of the bathwater.
The real question now isn't just what happened to MFS? Because after all, MFS is a very small business. So the real question is, are there other lenders using similar funding models and are under pressure right now? That's exactly what the markets will be watching next.
Look, I think, the examples are adding up, right? First Brands, Tricolor, now this, right? So I feel that we're in the point in the cycle where, fraud is surfacing to the top and people kind of pushed into corners of finance to get that extra return. And it's probably, in hindsight, looks like a bad idea for some.
And Paul, you turned to me and said, what about Jefferies? What First Brands, Tricolor, and now this next thing.
Exactly. So, Constantine, I guess that kind of goes to the question of, do we put this in this, it's just a one-off idiosyncratic thing, or is there something more broader here that people are concerned about?
I think definitely. I think, it's only how many examples do you need for it not to be considered a trend? That's my view.
But what do you think? Is MFS just an isolated situation? Or could this expose deeper issues in UK property lending and beyond? Drop your comment below, and if you found this breakdown useful, be sure to like and subscribe for more videos.